Boom. Good morning, everybody. Happy Tuesday. It is time for pre-market prep. It's 8 a.m. You know what that means. Spencer Israel, Joel Elconin, Dennis Dick. On today's show, what happens when your stock gets an M&A rumor? What do you do? Well, usually they're gifts. Peloton is the top story of the day. They pre-reported their earnings. Their CEO is stepping down. They're laying off 20% of their workforce. A lot going on there. We'll talk about all of that. We'll talk about some earnings. We'll talk about some LiDAR stocks. We'll take questions from our chat. We'll talk about bank stocks with our guest, Nate Tobik, at 8:35. So do what you do. Hit that like button. Good morning, everyone in the chat. Blind Trader, Robert, Fourth Wave, Tom, Dylan, Duncan. Can't name you all, but I see you. And let's start today's show. This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel. Joel, you don't like my blurry background? Oh, you're on mute. Hold on, you're on mute. On StreamYard, I think. Or maybe your headset? I don't know. Man, let me tell you, we've been having all sorts. Yeah, I hear you now.
Okay. Good morning. Good morning, Spencer. How you doing?
Good. You don't like my blurry background I got going on?
Yeah, what's going on with that? Did you pay for that?
What's going on with that is I'm using a different camera because my main camera decided to not work this morning. So that's
it looks like it makes the background look like a fake background, but it's a real background.
Yeah.
It's real.
You pay for fake. I don't get it.
This is my backup camera because my nice camera is just not cooperating with me. So anyway,
Okay.
Here we are. Bring up your charts for me, Joel. And I would be very curious to see how we are trading now after the close yesterday, which left a lot to be desired.
Yeah, we're still lower. We're lower by 5 1/4 handles. Had a little pop overnight. Hey, we're just testing Monday's low, 62.75, 63/4 a low. We got to bounce off that. Let's see if it happens. Crude double top at 93 and change, down to $1.72 at 89.62. Gold down 280 at 18.19. Silver in the red by 1/4, 22.83. Bitcoin down 660, getting up near that old support, new resistance that's down at 43,575. Ethereum futures, they're going the same way. They're down 74.50 at 3084.50. But you know what? No matter what you guys do, no matter how much you pick on me today, I am in a great mood.
We're not going to pick on you. It's no pick on Joel Tuesday.
Do you know why I'm in a great mood?
Why?
I'm doing something tonight that I probably haven't done in a couple years.
Something to do with COVID. You're going to see a movie.
He's going
not a movie.
Going to a Michigan basketball game?
It's at Penn State. I'm going to the game on Thursday at 9. But no, you guys are close. It's close.
Oh, man.
At LCA.
Oh, he's going to a country music concert.
No, not country music.
Oh,
no.
I thought that
rock and roll.
You could consider him many different genres. He's an old buzzard, though. He's an old guy. He's even older than me. Some people will like him. Some people won't. But Spencer, you don't know who's at LCA tonight?
Right now.
Oh, Elton John's in town? I didn't know that.
Elton John's in town.
EJ.
You're going to see Elton John. Yep.
I saw
I
EJ.
got it. I got
saw
it.
him about 5 years ago. He does a good show, man. You can't go wrong with EJ.
No.
Benny and the Jets.
No one calls.
Great stuff. 70s stuff, top notch. When the newer stuff I didn't like, but the 70s stuff, top notch.
Nobody calls him EJ, first of all.
I call him EJ. I yelled out when I was at the concert, "We love you, EJ!"
Right.
And he put his hand up and waved. I have the loudest voice in the whole concert.
Second of all, I've also seen him live. He was fantastic. So
the Rocket Man.
You guys want to hear the best Elton John story? This one has never been told. Dennis, you've never heard this one?
Okay, I was sitting back.
This never been told. We can get my sister on to verify, or maybe not. She's a busy girl running the state of New Jersey. But, okay. Going back this a long ways, I was in single digits at the time.
Okay.
And there was a radio station in Detroit called CKLW. Do you remember that, Dennis?
Oh, yeah.
CKLW, the Motor City. Yes. So they had Elton John on as a guest DJ, right? You used to be able to call in radio
Wow,
stations.
that's
So you could
crazy.
call in. We used to call in. We tried to win a Pacer once. We used to call in. And so, they were like, we're accepting callers for Elton John. So I'm dialing away. I'm dialing away. And they said, you're on next with Elton John.
Oh my gosh.
Yeah. And so they
You
put
got
me
to
on
speak
with
with
Elton
DJ.
John, and I'm talking to him. And my sister, who's 3 years older, was downstairs, and she had the radio on. So she heard me talking to Elton. So she picked up the phone, and I yelled at her. I go, Elise, put the phone down. I am talking to Elton John. And we started arguing.
With Elton
Okay.
John listening.
Well, and you know what he said? He goes, let's calm down here. He goes, I'm gonna sing Yellow Brick Road. Do you guys know Yellow Brick Road? We want you to hum the background of Yellow Brick Road. And so we did that, and then
This is
soon,
not a true story. This
and,
is
and
you
then
out there
I swear,
fighting on the phone, humming along with Elton John. What year was this?
like I said, I was probably I was probably 7 or 8 years old, and
So you're
Elise was
talking just
probably
when he was just getting started, early 70s.
This is yeah, and Elise was 10 or 11. I'll try and get a hold of her.
I thought you could try to get a hold of Elton John and see if he
No,
remembers
I don't
the
think
humming.
Elton would remember that. Yeah, but she was like, I was like, Elise, get off the phone. I'm talking to Elton, and
So
he
you guys
didn't like
hummed the
that. I
whole
swear
song in
that's
the
a true
background.
story. That's a true
Can
story,
you still
guys.
hum it, Joel?
It's been a long time. Yellow Brick Road. No, I don't. I can remember
All
that.
right,
The
all right, all right.
All right.
Pinball Wizard.
That's
He's the
no.
Pinball Wizard.
That's the
Well,
Who. All right.
Yeah.
Anyway,
well,
uh,
that's the Who,
that's
but
the
Elton John, of course,
okay.
played
Anyway, moving right
Tommy
along here.
and Margaret.
Let's go into the news of the morning. Obviously, is Peloton. WSJ has been all over this story. They reported overnight that not only is the CEO stepping and the founder stepping down, John Foley, but they also announced 2,800 layoffs. And while they're at it this morning, they pre-reported their earnings, which you almost never see. You really only see it when it's like going to be really, really good or really, really bad. In this case, it is the latter, unfortunately. So they did pre-report their earnings for the current quarter, and they gave guidance going forward this morning. They were on the schedule for tonight. The numbers, as you'd expect, were not great. Their revenue is declining. Their earnings are going in the wrong direction. But this just fits into the larger picture here. We've been talking about Peloton now for weeks. You had the Amazon rumor on Friday, or it was like Amazon slash Nike rumors on
Yeah.
Friday. And the stock has been doing all sorts of crazy things. And you know what is interesting to me here is the market doesn't always react to CEOs leaving in the same way. Sometimes when the CEO is out, the stock rips higher because they're like, thank God the CEO is out.
Yeah.
Other
Yeah.
times it's not that, and this is a case of I think it just speaks to how little slack there is, how little tolerance there is for this stock now on Wall Street. There's no tolerance.
I mean, you look though, and in this case, everybody's like, are they going to announce an M&A rumor? Are they going to announce, somebody's going to buy them? Are they not going to announce it? And then they turn around and get slapped across the face with the CEO leaving and cutting jobs. It's not what they wanted to hear. With that being said, and I'm not going to go into, because we said we wouldn't pick on Joel today, so I got to take it easy on the Peloton. But with that being said, it's good news that it has bounced off the lows. There is obviously still people that believe that a deal is possible, and Wall Street Journal did ask the CEO, or I did ask the company, and I believe they said that, well, they're looking to any, possibilities here. Didn't comment any further than that, but they didn't dismiss it either. So I think that's why you saw the stock bounce back. Not that this was a great report, not that, they're kicking ass and taking names. It's that there's still the possibility that there could be a deal to be had. And that's why when it sold off to 25.5 and 26 this morning, that the buyers came back in. So now we're up at 29. I mean, is there a possible deal here? It's possible, but like I've said personally, I don't think there is. And that's why I'm not buying the stock. I think, that it's going to maybe hold on just because there's going to be people that believe that a deal is coming. But I think eventually it starts to leak again. And I think eventually it does go back down. Not saying today. I think it's bounced back nicely today. I don't think it's hitting the 25.5 and 26 again. I actually wouldn't even be surprised if it went green, but it's still a struggling business here, and I don't think anybody's buying them.
What's Gene saying? He's on CNBC right now. It's like, is anybody listening?
Oh
Or are they
man,
all
Gene's
listening
talking
to?
Peloton. Can we can't steal CNBC's content here, but Gene Munster's ours. Gene's
Yeah.
our guy.
No, I
We're
wonder
taking him
what
from
he's
him.
saying. Currently trading down 56 cents at
I'll mute and listen to what he's
99.19.
saying.
I do have a Peloton update. Lisa worked out on it this morning. That's my update.
No, there's obviously like no joke. There's obviously still value with this company, and so yes, even though and I was looking at the earnings because they guided for revenue for the current quarter, they guided like somewhere like basically the high end would be $1 billion, and while that is still well below where the revenue was at the same time last year, it's still it's twice what it was 2 years ago, right? So the company still has had tremendous growth in the last 2 years. There is still value here. They still have like what they say 2.2 million 2.7 million connected fitness subscribers. I mean, they've got people.
They got brand recognition is
Yeah.
what they have, and that is worth something. This is not a nothing burger. It's not a zero. It is worth something.
No way. Yeah.
But there's people out there that are saying Peloton Q, like it's going to zero.
No way.
I don't think that's the case. I think at a certain point somebody would buy it. I've said I don't think that price is 35. I don't think it's 30. I think if this thing got down into the low teens, I think eventually it'd have a suitor. Same thing I said with Robinhood. I think eventually, if Robinhood goes low enough, somebody would scoop them up. So right now, valuation is still nosebleed in my opinion. That's why I don't think somebody's coming in and paying 14 or 15 billion dollars for it. But would somebody come in and pay 4 or 5? Yeah, I think they would because the brand recognition is there. They do have a lot of users that are hardcore users. Lisa using it this morning. So I just think that people overpaid for the growth potential of this, and it's not growing now, but there's still something there. So I agree with you, Spencer.
And then the bottom line here that Dennis already talked about is like if you are in something for a trade and you're underwater and you get an M&A rumor and the stock spikes, very often those are gifts. It's just a present. Take the present.
Yeah.
Take the present.
Because if you think about like stock was 25, if there was going to be a merger announced, were they going to give 100% premium? The business is struggling. This isn't some growing, startup here that's, okay, well, this is a struggling business. So the premium probably wouldn't have been much more than 40 or 50%. And that would have put you in the 35, 37 area. So the algos are crazy enough to pay right up to what it probably would have been on a takeout price. I don't think a $60 takeout price is coming here. I don't think a 50. I don't think a 40. I don't think a 30. I don't even think a 20. But I do think in the teens that somebody could potentially buy it because there is some great brand recognition here.
Sure.
So at a certain price, yeah, sure, I could get on board. I just think this price is not 14 or $13 billion.
All right, we're not going to do a repeat of yesterday. We're not going to spend a half hour.
Not going to be the Peloton show.
So we're going to move on here, but we're going to stick with the M&A theme. Nvidia and ARM, basically from the second this deal was announced, like a year and a half, 2 years ago now, it's been under scrutiny, and it's not going through now. So NVDA shares are trading lower this morning because of that headline. SoftBank, who owns ARM, is going to just spin them off into an IPO. That's what they've said now. That was their plan B. So the Nvidia ARM deal that people were hoping for, not going to happen.
It's a nothing burger for Nvidia, it looks like this morning. I mean, maybe this was expected because the stock is just basically down a little bit higher beta in the Q, so they're just not even really responding too much to it at all. Technicals on Nvidia, Joel, because the stock we haven't talked about for a while. It is a tough chart, so I'm throwing it.
It's looking. You know what? I think they're coming after Nvidia and AMD. Look at that monthly chart. I mean, you had a big, all-time high. What was that in November? Red candle in December. A
You're
bigger red
bottom right.
Yeah,
bottom right,
bigger red candle in January.
Yeah.
Looks like this thing. I mean, it looks like it has a date with $200. I mean,
a chart like that really gives you perspective too. Like sometimes when you're looking at a long-term investment, I always start with a 90-day, and it gives me a feel for is the stock trending up or down in the the shorter term. But if you're looking at a longer-term investment, sometimes it's a good idea to think about where it's come from. And I mean, in July of 2020, when this crisis started, the stock was $60. Now it's $250. You have seen a lot of companies do a full all the way up and give it all back. Nvidia is not going to do that. It is a good company. It is continuing to grow. It is in everything. I would be a buyer if it came down to the $200 area myself, because yeah, the multiple is not cheap, but this company is just the best in breed. So I think at a certain point you will find buyers here again. It's just a matter of what the market does. The market's going to be the driver going forward here. Nvidia will still lead the charge. If we start to make new highs, Nvidia is going to be right there with the markets making new highs probably again. But, it probably just got overdone. I mean, we went from $50 to $350. I mean, it's not absurd to think about a
stock split helped out with that.
It did.
But it's still there. I mean, it's still 50 to 350. So yeah, it was a driver, and obviously, for people coming in because shares are cheaper. But I think at a certain point in time, I would buy AMD and Nvidia. I mean, AMD, the $100 level has just been the level, and it was such. I'm kicking myself still because I thought about it. I looked at the chart. I mean, sometimes technical levels are just so strong, and it's just such a level. Go out to the monthlies and go out to not that far out on AMD, but go out just to like the last 2 years. So just show me so I can see that 100 level in a little more detail. There you go. So take your line. I mean, 100 classic resistance in 2020, 2021. We broke out finally in July of 2021 and took out the $100 level. Then it became support. Then we had the ridiculous run up to 160, which was overdone. And where do we bounce? The old $100 level again. Sometimes things just respond so perfect to technicals that it's hard not to take those trades. And I'm mad at myself because I thought about it when it was like 103, 104. And I was like, if AMD gets to 100, it probably bounces there. And then you get sidetracked, you don't think about it again. And then like, sure enough, it bounced right there. So, does it get back to 100 again? I don't know. I don't know if you're going to get another shot there or not. But AMD and Nvidia are on my shopping list. If we get significant sell-offs in the market again, these are two stocks I'd like to add to the longer-term portfolio.
AMD is actually looking healthier than Nvidia.
Still holding trend.
At least on a monthly perspective there, because you are working on a green candle.
Earnings.
The
earnings
this month. I would say for AMD, now that you had, how high did we get here? Was this 162, 164? I'll tell you, this 132 area that's also this high here. I mean, if this is going to be the AMD of old, we're going to bust through this 130. We're going to get to 132. We're going to hang out there for a couple days, consolidate, and make another run. But folks, when you have runs like this, right, with these kind of green candles, and then you have a couple red candles like this, it's a whole different market dynamic. It's a whole different structure because we've been to 130 before. We've been to 140 before. We've been to 150. People have bought at those levels. They wanted to. If AMD gets back to 145, says Grandma Investor, I'm out. So it's a whole different technical setup. Right now, 130 is your major resistance, but I'd say this whole zone until it clears 130, 132, path of least resistance lower for AMD.
All right, let's move it along here. Let's go to
earnings.
Let's go to earnings, and I want to get this out of the way. We had some confusion on the pre-market show because I was talking about Pfizer, ticker FISV, right?
Yeah.
Yes.
And I thought you said Pfizer.
And they both report earnings.
That should not be allowed. So we need to protest this. Pfizer and Pfizer cannot report on the same day because me and Spencer don't know which stock we're talking about. And the media, it screws us right up. So Pfizer, completely different, two different companies reporting on the same day. Ridiculous. But
let's start with Pfizer, the pharmaceutical company, the one that's making the drugs and all that,
sure.
and not the financial company. Pfizer earnings, the EPS beat the estimate, the sales missed the estimate, and then they gave some EPS guidance for the year that I think came in. Let's see. That was in line. I don't know what the stock is doing. I've been too busy looking at Pfizer to look at what Pfizer is doing.
I own, so full disclosure, I own Pfizer in the long-term portfolio, not selling it. Now I'm going to talk against my book. Again, I think I'm the only person on the street. Sometimes Joel does it, but with Peloton, he always did it. But I'll tell you, I'm going to talk against it here now for the simple reason is that I believe Pfizer has just been the environment. This is as good as it gets. I mean, the market is looking at this report was fine. The numbers were good. It doesn't matter though, because looking forward, think about, I don't think everybody is going to be continuing to get a Pfizer booster shot every 4 to 6 months. So this isn't in perpetuity. Like some people, or the market maybe was pricing it out that, oh yeah, we're all just going to continue to get COVID shots. It's not going to be the case. I mean, maybe we're going to need them, but there's going to be a lot of people that just say, I'm not getting one of these shots every 4 to 6 months. So people who have got the shots, obviously, that's been a huge revenue source from them. We thank Pfizer, and obviously the vaccine makers for bringing us, obviously it looks like it helps you from not getting as sick. But I think going forward, there's just going to be resistance to getting a shot every 4 to 6 months. So you look at it, it's been a perfect environment for them making all this extra money from COVID. As we start to look past the pandemic, it's like, okay, what are you giving me to look forward to? What's the next big source of revenue for Pfizer? Because we obviously had the vaccine. That was a huge driver for their growth, a driver for the revenue. And I don't see that driver going forward, which makes me think that this environment was just simply as good as it gets for Pfizer. And maybe it's going to have a cooling off period until we see a little bit of, another source of significant revenue to keep that revenue up.
Yeah, I mean the street's agreeing with you too. Looking tired going into the report. Now you've taken out the support you had in the lower 52 handle. So man, I'll get 52 and a quarter. Make that make that 3-star resistance. That'd be a big pop. Though Pfizer will move around. I mean, if you want to, if you're stuck on this, you could get a shot to get out. Like you just had a recent spike there to nearly 52, so 52 and a quarter. On the downside, I mean, $50.
Yeah,
I mean,
$50. I think it
yeah, I
tested
mean,
today.
yeah, 50 is a good level. Don't
Do you
don't
still
really
got this
like
one?
it after that. Don't like it under 50.
Do
You
you
can
still got
see
it?
that. I still
Me
have
and
it.
Joel talking against our book here.
Yeah.
But we got this in the long-term account. I think my average cost base is $14. So I'm not selling my Pfizer, and it's not expensive stock. So by any means, I mean, if you're looking at this and gets down to like 45, I mean, this is still one of the best pharmaceutical companies in the world. You have still an aging demographic. I mean, owning pharmaceutical stocks. I think right now, if you're just looking at value out there in the markets, not saying Pfizer, but there are so many pharmaceutical companies trading with 7, 8, 9 times earnings. There's just a pile of them. And I think that's where the market will eventually gravitate to here. I mean, there's a reason Bristol Myers is actually making a new 52-week high. And the stock is just cheap. Actually, I'm sorry, it's not a new 52-week high. It's because it was up at $69 back in August, but a new 6-month high here. The chart's been going straight up on the 90. I mean, it's breaking out. I mean, what's the PE on Bristol, Spencer? It's got to be under 10.
Yeah, I'm looking around. I was trying to pull up some
Guessing 9.
Bristol Myers type names. It's forward PE of 8. You can
8.
also look at
It's just cheap.
like Eli Lilly. Where are they at right now? Eli Lilly
They're usually a little higher because they got the Alzheimer's
28.
potential there.
Merck is 10.
What was Lilly's?
28.
Yeah, that's because the Alzheimer's. The
Merck
wild
is
card there.
10. Then you can look at like names like GSK. What's GSK? I wonder.
GlaxoSmithKline.
Cheap for a long, long time. That's probably under 10.
14 for a
Well,
forward
it's a little
PE.
higher.
So
stock's moved up.
yeah.
There is just in value land, there is just a lot of value. Like even look at an AbbVie. I mean, here's a stock making a new all-time high. I'm long AbbVie. I've been long it since birth. I've never sold it. Actually, I did sell a piece of it, but I haven't. The shares that I've got, I always joke long since birth because it's from the Abbott spinoff, and I've got it from actually I owned Abbott. I've just stuck with AbbVie too. But what's the AbbVie? I mean, the stock's making a new all-time high, 3.95% dividend still. And what's the P on this thing?
10.
10. These things are cheap. I mean, you're going out there and you're trying to find, value. If you're looking into value, pharma is still, the big pharma. Maybe not so much the biotechs like some of them, but the traditional pharma. It's always been cheap. Don't expect the multiples to just blow up and expand to 15, 18, 20 times. But I mean, they can. I mean, in some, at 8, 9, 10 times, you just start to wonder, like, how do you go wrong in the long run? Unless these companies, obviously have, a real lull, and obviously it's patent expirations, and you have to always watch stuff like that. But for the most part, the pharmaceutical companies are just cheap.
And there's a big difference between pharma companies and biotech.
Yes, there is.
Right. Yeah, we went over this a few months ago, and the pharmas are the ones that actually have the drugs and have the revenue, and the biotechs are the more early stage, um, drug technology creation platforms where it's not as guaranteed. Anyway, let's move on here. Take-Two reported earnings overnight. Their report was good. I mean, their earnings and revenue are still growing. So their
Yeah.
EPS did come in a little bit light. I'm sorry, their sales came in a little bit light, but their EPS did come in line with estimates. They raised their net bookings guidance for the year. As of now, currently sits in the call it like $3.4 billion area for the year.
Straight up into the report, so expectations were pretty high. I mean, the stock actually had a rip-roaring rally 2 days ago.
188. I think it got to.
Pardon me?
Got to 188.
Oh, on the number? Oh, I didn't even
Yeah.
notice that. I actually didn't even notice that. I should have been selling out there. I'm still long Take-Two. I've had it since the pandemic started. I sold half, but I've still got half of it and sticking with the other half.
After all that big move from 188 down to almost 165, you got a quiet consolidation here between 170 and 172. Just kind of quiet. So below 170, look for more downside. They get this thing above 172. They got a ways to go. I'd use the bottom of yesterday's range, 173.57. That's to fill the gap, and then the close at 175.10. But big run up since that low. Actually made the low long before the market bottom. But tough chart. Take-Two and how EA. This is the first one to report, right? EA hasn't reported yet.
No, EA reported last week.
Last week,
Yeah.
that's hanging out. That's just hanging out up here. That's closer to all-time highs than anything else. Keep an eye on that 135 level in EA. It looks like that was probably.
I mean, there plays on the
earnings day.
metaverse too, the game.
Yeah,
So I mean, it all ties in there. I think you want some exposure to one of these companies. Obviously, Activision's going off the board eventually. You would think to Microsoft. I do believe that deal will get approved, but I think you want some exposure here. I've always liked Take-Two. I've always felt like of the big three, I felt like it was the best one. So, anyway, sticking with it.
From a growing company to a not growing company, Harley-Davidson also reported their EPS beat, their sales beat. But I mean, if you go back and look at the history here, you can clearly see that the earnings are not growing, the revenue is not growing and nor has it been for several years,
a long time.
So I don't know. I mean,
they're getting a pop. They're liking the report. They hit the 39.50, and you got a couple highs in that area. So you better get back up and take out that 39.50. That might have been an exact daily high at 39.59. The previous day's high 39.80. So better get back up there, take those out, get into the 40 handle, or you could easily see a test of the top of the range from yesterday at 36.94.
You know what the problem is? Back in December, I believe they had some guidance. I believe, if I'm correct, if you go back to December, Spencer and the Pro,
and it went crazy.
Yeah,
right here,
really went nuts, and it gave it all back in one day.
That's not what it was.
Oh, spinoff. It was a spinoff of the EV unit.
Remember, that was the spinoff of the EV
unit. Yeah, the EV buzzword.
Yep, that's right.
And then it gave it all back in one day. So their problem is there's just bag holders in this stock, like a lot of bag holders, like forever. Because, if you go to the monthlies, 2015, 2016, I mean, we were in like they were a decade away from the all-time high. Like, when was the all-time high in this, Joel? My chart goes back 10 years, but I think it might even be farther back than that.
I see just under 75.
Okay, so that is the all-time high. I see that too. I just didn't know if it got higher than that. So you go back to 2014 with $75. They're just bag holders in this for the last 6-7 years. I mean, there you go. Go back to 07, it was even higher. I mean, this is just a company
not by much, man. 75, 87 then.
Struggled for a long time.
All the way back after the financial crisis. It went all the way back and failed up there. This is on the monthlies. Wow. Monthly charts can help you out, but you're right. This has just been
dead money for the better part of 15 years. Is this going to be the year it turns it around? I'm not going to bank on the trend changing.
That was I mean, there are more earnings reports, but that was kind of the ones that
I always like talking virtue. you know,
Virtue?
because
Sure.
they're one, and obviously I did buy VIRT, and I think I actually got the bottom on this one, so I just put it back in my long-term portfolio. Had it in the long-term portfolio a few times. Love Virtue Financial for the simple reason is that I understand the business. Obviously, I'm not a high-frequency trader, but I understand active trading, and I'm sure we have a lot of strategy overlap. They're obviously major market makers. I'm not a market maker, at least not anymore, Joel, but you know, but we do a lot of trading. And I know when my trading profits are going up, Virtue Financial profits are probably going up as well. There is a direct correlation between a higher VIX and Virtue Financial's profits and my own P&L as well. So I can kind of almost feel like they're going to do pretty good. So anyways, I wanted to be long this before the quarter started. I bought it right back around 28 and the change, low 28s, back, I believe, on the 24th of January, put in the long-term portfolio, sticking with it because I stuck in the long-term portfolio. So that's why I'm freely talking about it. And it was a good report. Give us the numbers.
Yeah, the numbers were good. A $1.19 EPS versus an 80-cent estimate. Sales of 705 versus 705 versus 367 million. Yeah, holy, that's a massive.
That's the trading.
And
So,
then I want to show you this too. So this is the earnings calendar in Benzinga Pro. You really you should only be using this to compare the same quarter every year, right? So you don't want to compare Q4 to Q3. You want to compare Q4 of this year to Q4 the year before to Q4 the year before to Q4 the year before that. So if you look at Q4 just now, the one they just reported, they said, okay, EPS $1.19, revenue 705. Go back a year, EPS of $1.18, revenue $676. Go back 2 years, revenue $403. Go back 3 years, revenue $440. So revenue 40. So the revenues almost not quite, but almost double. What's that, like a 35-40% increase in revenue in a couple years? That's the trading. That's what you just said. That's what that
yeah,
is.
that's the trading aspect. And Virtue Financial, obviously, you know, they benefit from payment for order flow as well. It's the only public company that you can trade that actually benefits from PFOF. That's the risk. If regulation slaps and starts to come at payment for order flow, and they start to obviously look at and obviously it's more of a risk for Robinhood because Virtue actually pays the payment for order flow, but they get those orders, they buy those orders that they actually can interact with ahead of everyone. So that's the advantage, and we've talked about that before, so we're not going to jump into high frequency trading and the edges that they have. But I mean, they have a huge edge in being able to buy order flow from Robinhood and then having first dibs to trade against those orders directly. And that's where they make a lot of money. But I mean, whenever the VIX goes higher, you're going to see more profits from your market makers. And Virtue Financial is one of your largest on market makers out there now.
Keep an eye on this one, Triple D, because you've just looked basis the monthly charts.
Yeah,
You haven't been up in this area since well,
2018.
yeah, 2018. You kissed it a little bit in mid 21. So, you could be looking at just a bona fide breakout here. I would just keep an eye on the close today. We're trading up on 4,600 shares at 32.66. See if you can get that high close for the move, which they're, like I said, trading up 66 cents. I just don't know if you're going to run in some profit taking here or just get a super clean breakout and
I
maybe get
wouldn't
up
chase
that.
it.
Yeah, I would.
It's never pays to chase in this market environment altogether. It's not so much just to Virtue. It just doesn't pay to chase anything. So, is the market going to start? This isn't a high, this isn't a story that's going to catch a lot of media. I mean, we were going to not talk about it, but I stopped just
Brought
because,
it up, yeah.
well, because it's trading. So, I have, a feel
A
for
good
the
feel for
business.
this one. You've
I have a
traded
feel for
this
the
a lot.
business.
You've traded this one a lot.
I've been in and out of it in the long-term portfolio for a long
Right.
time. Whenever whenever you start to see volatility start to pick up, usually Virtue Financial starts to go up. It's actually kind of a hedge with the market to a certain extent because when it really gets crazy, this is when they make more money. It's the same thing with my own P&L. When the markets start to really go crazy, I make more money because it's more inefficiencies out there. And my Virtue Financial is profiting from inefficiencies, market making and inefficiencies. So, and they're great business. They've done everything well, obviously. So, I've had in the long-term portfolio off and on a couple of times, but when it gets overdone, then I usually take it out and try to re-get it. And usually it's the play to sell and then rebuy because usually it pulls back eventually.
All right, it is 8:35. Time for our guest. Let's bring on Nate Tobik. He wrote the Bank Investors Handbook. He also runs CompleteBankData.com. And we love having Nate on. I love talking banks with him.
Yep.
So let's get him on the show right now. Nate, good morning.
Good morning. How are you guys doing?
We're doing. How you doing?
That's as good as could be asked for. Yeah.
What are you seeing out there, Nate? I read this interesting article in the Wall Street Journal. When was it? It was yesterday. Now I think it was yesterday about like Bank of the Ozarks doing a lot of lending. It just seems like there's a lot of weird things happening.
The Wall Street Journal article. Is that the?
I'm just trying. What are you seeing out
that
there in banking land? I'm just trying to.
that's a. So I was looking at that one too. I mean, that's my favorite punching bag. So they let's see. Okay, 42% of their portfolio is construction loans. It said, I think it said in the article, like Manhattan developers kind of singularly credit them for the construction boom in New York. They talk about the fact that what's it? The CEO has this 15,000 square foot house and all this stuff. If you look at their financials, this caught my eye. They have like almost an $800 million life insurance policy on the CEO.
What?
I mean, they have a book value of like $4.5 billion. So, there's a lot of things in there. I look, it's like, living next door to someone who's collecting dynamite in the shed. It might be fine for years, but one day there's the lightning strike and you don't want to be nearby.
Yeah, that's fair. I figured you would have an opinion one way or the other. So that's the Nate opinion on Bank of the Ozarks. But outside of that, though, Nate, I mean, in terms of the environment that we're in, right? Rising rates, the yield curve doing what it's doing. Where do you see the banks right now? I mean, we're out of earnings season. The banks all struggled through that. I mean, the stocks did. The banks did okay, I guess. But I don't know. I would like your take.
Yeah. I mean, so earnings were all over the place, and some of it. So I'm looking at some notes here. What was it? Okay, it was JP Morgan, so like they released, this is a great example. They had like a 10% of their earnings were due to releasing credit reserves. And I started to see this in a bunch of other ones. And so this actually is a huge benefit to banks. They over reserved for losses in 2020. And now as they kind of get hit with bumpy quarters, they just release some of that. And I mean, that's a totally valid thing to do if they're not seeing any credit issues. So that's kind of a way to pad the earnings on the way up. Okay. And, it's kind of an interesting environment. I mean, all these banks, a lot of them are loaded down with cash. So like, if you look at Bank of America's last quarter earnings, deposits were up something like 15% and loan volume was up. It was like 6 or 7%. So there's a lot of extra cash waiting to go into things. And typically in a rising rate environment, a lot of banks, they don't have that firepower. Right now they do. And so, if the economy kind of keeps ticking along, I think earnings actually could be, turbocharged because they don't need deposits. So there's no pressure to raise deposit rates. Yet the new incremental loan demand is at the higher, it's at whatever the higher rate environment is. And so for all those years where net interest margins were being totally crushed, it's now they have a chance for that to expand.
It's interesting. You look at the banks here, and after the earnings, everybody's like, oh, they're all selling off on the good reports, but they've all kind of bounced back. And I mean, it seems like, we are in this rising interest rate environment. And I've said, I think in 2022, you kind of want to be long the banks. So we kind of got a gift on at least all the majors selling off. Are there still some gifts to be had in some of these regionals, or what regionals are you on? I feel like I missed the boat on a few of these bigger ones, but maybe there's some regional ones that haven't gone yet.
I mean, I think almost across the board. So, think of it like this: when the market is falling, people start to get worried. They're worried about, can banks survive and that sort of thing. But what bank investors really needed to be worried about was 2020, when everyone was sitting at home and people were worried. Commercial rents weren't going to get paid. Houses weren't, mortgages weren't going to get paid. Everyone sailed through that just fine. And now we've had this asset appreciation. So in terms of the underlying assets of these banks, I don't think there's, outside of maybe some, certain areas that are just going to get steamrolled. I don't think there's really any problems, so to speak. And, you look at some of these banks, they're trading at 10, 11 times
Yeah.
earnings, around book value. Historically, that's really pretty cheap. For the larger banks, averages about 160% of book value. It's like 15 to 17 times earnings. So when it's under that, there's a lot of upside. And I don't think their earnings are going to get pushed down as rates go up, like other companies that are very rate sensitive.
Is there some specific names that you like better than others?
I mean, so I like some of the small stuff, but if you're looking at regional banks, I mean, I like FNB, First National Bank of Pennsylvania, and they're still pretty cheap. There's another bank that tickers Fumble. I think they trade for like $8,000 or $9,000 a share. These guys, they're in Long Beach, awesome operators. If you want some, even it's kind of like, so, you talk about like banks being a niche, and then a niche within banks is there are a lot of minority owned banks. And specifically, there's a whole sector of Korean owned banks like CBBI, and they're in LA and Texas and then Hawaii. Great quality, great earnings, great assets. I think they trade for like 80% of book value. And it's just, this is one of those things. I've owned a lot of stocks like this where I buy the shares, I stick them in the corner, I never think about them again. And then one day they've doubled. And that's just
the way you're supposed to do it.
Magic.
That's it. And, I've probably lost more money trying to outsmart myself than just doing that. And, it's not as fun, I guess. So a lot of banks are saying record earnings, in the smaller sector, so you have like FRSB is one still, like, what is it here?
These are small
earnings
companies.
earnings grew significantly. Still, it's at 90% a book, and it's like someone's going to buy them out at some point. Which kind of brings me to the next thing, which is I think that might be a risk in this market. Is we have a new FDIC chairperson, and they outlined their top 5 priorities. It was CRA, climate change, regulating crypto, reevaluating bank mergers. And the bank mergers caught my eye. They said no one's looked at the rules for this in the past 25 years, and now it's time to look at the rules. That's not typically something you say when you're about to loosen things up,
Exactly.
So, are there going to be a lot more stringent rules around mergers? I would probably bet yes. And so the end game for some of these banks who management's tired from the last 2 years, their values have gone up, they want to cash out. That either it happens now or there could be some bumps in the road.
We're on with Nate Tobik, author of the Complete Bank Data book. Nate, where are you at on interest rates? I mean, you're hearing everything from, wow, they're gonna slow this economy down. We're gonna go into a recession, and then you have the banks talking their book with 4, 5, 6, 7, 8 rates. Where do you stand on what Jerome Powell's been up to and what he's going to do in the future?
Sure. I think the Fed is going to keep raising rates. I think, we'll see the 4 rate increases. I don't think it'll really matter. If you've got, say, 7% inflation and, the benchmark rate's at 1 or 1.5%, so what? And I think that's, unfortunately, that's kind of like a self-perpetuating thing. I know a lot of people who I know personally who are not into markets have all talked about inflation and, trying to get more money and stuff. And once that starts to spin, it does not slow down quickly.
So this is a question from Jay in our chat. So do you expect consolidation in some of the smaller community banks?
I mean, yes. And I think that's always something that's been happening. I believe the rate of mergers and acquisitions is something like 230 to 250 a year in smaller banks.
Yeah, you
I would
see one of these, like I see it go by every night. It's like, oh, but they trade by appointment only, so there's like no arbitrage opportunities for me. So then I just
yeah,
gloss over them.
that's tough in some of these. I've seen the same thing. I mean, so one arbitrage. This is like I've done well with these the thrift conversions. So you buy these things at like they IPO at like $8 or $10 a share, and I for a long time I just bought every single one of them. I didn't even look twice.
Tell
And
us about this. Tell us what is a
yeah,
thrift
so
conversion?
it's like it's a cooperative bank that the shares are owned by the shareholder, by depositors, and they decide to IPO. And so what they do is basically the depositors now they put money in to get their shares. It doubles book value, and now they own something that they just had a deposit account.
So it's sort of like like a mutual in a
It's
way.
a mutual.
Yeah.
That's exactly it. Yep.
Yeah.
They always come out at like $8 or $10 a share. That's like the price. And a lot of people try and get deposit at these things. They're going to fly to Ames, Iowa, and try and sweet talk a teller to get $100 in there to get in at the IPO. I did just as well buying them after they already IPO'd and they're on the market. And so the dynamic is, think about this: the CEO or management, they're doing this because they want liquidity and they want to get out. They own a mutual and they want to get out of this thing. They IPO. The rules are the first year they're after a year they're allowed to do I think it's a dividend or a stock buyback. The second it's a buyback. I think the second year is a dividend. And the third year they're allowed to sell. Something like 80 or 90% of these are sold within 5 years. And they all sell for, they IPO 8 to 10, they all sell for like 25.
Are they out there? Is there any out there right now that we can look at on the charts? Like, is there any
Yeah, I mean,
actively
so if you
traded?
go to this is if you go to bankinvestor.com, this is like an old clunky website, but at the bottom, if you scroll all the way down, it says mutual banks 2022 IPOs.
Okay.
So there's one CFSB. And
hold on 1 second. There we go. I see it. CFSB.
Yep. And then if you go back to 2021 IPOs, I mean, I would just pick up all the ones that are trading. So there's, what is this? 1, 2, 3, 4, 5, 6, 14.
I'll put the link to this in the chat. And just to be clear, this is not like a new idea. Jay Rice said this. He did this years ago. I remember reading about this like 4 or 5 years ago. People were like, yeah, people just drive around. They turn it into like family road trips, and they just drive around depositing, $100 here, $100 there, $100 there, whatever the minimum is, and then
that's it. I mean, there's like a hobby to this thing for people. I just bought the shares because I was like, and so what I was doing is for a long time I was putting it was like $1,000 or $2,000 into every one of these. And it seems like a small amount, but when you start to look at what's trading for like the past 5 years, suddenly you've got like $50,000 or $70,000 floating in all these tiny positions, and I'm like, okay, that's and that's
what's the exit plan just when they get acquired? Because these things do not trade they're very widespread and they hardly trade at all. Liquidity is obviously an issue here, folks. If you're listening, don't just go and lift the offer, because some of these things are really wide. You're going to have to work these orders if you trade these
will
things.
Yes. Yeah, so I'd put in limit orders, right? Put in something that you're okay with and just sit on it and wait. And so typically the market makers who are doing this, I think they have to do the blocks of 100. So if you're putting in, like 36 shares or something, it's good luck. But yeah, it's a viable strategy. And I still have a bunch of these that are out floating around that haven't been acquired, but every couple months another one does. And these are the banks, because there's an incentive for, managers now have this liquidity. It's time to cash out. You could additionally do a screen and look for executives who are in their 60s and 70s. That, it's like shooting fish in the barrel.
Nate, question from the chat. What do you think about SoFi?
I don't know. I'm split. So you're talking earlier about Peloton and the brand value and stuff like that. I think that's actually a powerful thing for a lot of these, newer companies. I don't think, fundamentally, I don't think you're going to totally change and blow up banking. It's like the world's second oldest profession.
But yeah.
But if someone could generate brand value and it's a good brand value and they have it, I think there's something there.
Okay. There we go. Nate Tobik, his websites are numerous. CompleteBankData.com, BankInvestor.com. He's the author of the Bank Investor's Handbook. Nate, it is always a pleasure. Thanks for coming on.
Yep. And just the Bank Investor site is not my site. That's
Oh,
just
sorry.
I don't know
That's the
whose
site
it
where you
is.
go to.
Okay.
I just found it. Yeah. So
All right.
thank
I
you.
wrote it down, bankinvestor.com.
Thanks, Nate.
Yeah. Thank you.
And yeah, I saw the SoFi question from the chat. I wasn't making that up. Someone did it. No, yeah, it was donkey limit. So there, it wasn't just me. The question.
No, I think it's a good question for
Didn't
Nate. What
just
he
come
thinks
from
of
me.
SoFi. This is supposed to be the future of banking, SoFi. They tell me all the time. This is it. There's going to be no banks. There's going to be SoFi. I have that sent to me all the time.
I don't know anymore. It's 8:51, so we will do some ticker time. Oh, before we do that, VLDR. I wanted to mention that. This is a LiDAR play. It's been a long time since we've talked about these kinds of stocks on the show. They got a stake from Amazon. Amazon, according to a filing, had what is it now? They entered into a deal where Amazon has I guess they got Amazon got warrants. Amazon got or they got
Can we see
just
the
under,
chart?
yeah, sorry.
What's the stock?
VLDR.
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 Yeah. Amazon
Victor.
got a little under 40 million shares of stock and warrants. So it was via an 8K last night.
I mean, that's
Wow.
what you want. If you're in all these LiDAR plays, you want the association with the big name. You want, obviously, if Amazon's, putting a vote of confidence to it, that's going to lift the stock. They really lifted it last night. The stock at one time was up 100%. It's giving back 2/3 of those gains. You never want to see that. We are in this environment where obviously there's a lot of bag holders on a lot of these stocks. The bag holders from the last 2 months all got bailed out last night. People were quick to sell. $30 stock beginning of 2021 when everybody was paying anything for anything to do with LiDAR. And obviously that ship has sailed. So if you want these plays, I would pick on them. I would actually be in the ones that are associated with the big names like Amazon, but valuations for me, and I don't know. I'm scared that, I picked the wrong one.
40 million from Amazon is not exactly
Drop in the bucket.
a huge
Big for
vote
them,
of
though.
confidence.
Big
Well,
for
yeah.
40,
VLDR.
no, it's 40 million shares. It's
Oh,
not-
40 million shares.
Yeah, yeah,
Okay.
yeah.
Okay.
Okay, so it's 120
just to be clear.
million because $3.
I was going to say before I pulled up the chart, a lot of times I've seen this with a few different stocks that pop when that initial news comes out is a decent selling opportunity, but this came out just after the close, so that's when you got the pop. Someone likes it at $5. I mean, if you're not worried about
Nice
this
round number.
yeah, if you're not ever worried about it coming down to fill the gap at 406, that's where you're finding, you don't know if someone just shorted a boatload in this area and they could care less about the gap and they're bringing it up. But since that 4 a.m. open, you come down and seems to be a buyer at 5 right now. 9.3 million shares have traded. So there's always been quite a bit of price discovery on the upside and the downside.
All right, we'll go to the chat for some ticker time right now. Who made a comment about Norton LifeLock just now? A1 Property. NLOK has been on a run.
What's been going on there? I noticed it hitting my filters
Well,
the last couple days.
They had earnings.
Is that what it was?
Was it Friday?
Wow.
I think it was Friday they had earnings. Let me check in the pro. It was Thursday. Sorry, they had earnings Thursday after the close, and they beat on the top and the bottom line. Yeah, look at that Norton LifeLock. Huh.
It's a Kramer
Nothing in
darling.
there.
We should give Kramer some props because we give him heat when he makes bad calls, but he's been all over this NLOK. So this is one that's actually performing pretty well. I mean, there's not a lot of stocks making or approaching new 52-week highs in this environment. The chart looks good. I'd be a buyer of pullbacks.
Right. And I think you're going to get one. The only thing a little bit concerning here is that day that it had the big move from 25.38 to 27.59. You went from 5 million to 17 million. So a lot of people loaded the boat, right? You continued higher yesterday. You just got to keep finding, more aggressive buyers at these levels to keep it up. So keep an eye on that close from yesterday, 28.30. And I mean, you can call it support for now. All-time high, though, you might get a look at. 28.92. That was the high back in June. So if you're holding out for another target, all-time high, 28.92.
I'm avoiding the tickers we get asked about every single day, like Alibaba and Disney. It seems like Disney also.
Well, Disney's going to report, so
Yeah,
we did Disney yesterday, though.
So let's move on from that. Same thing with Tesla. We talk about Tesla all the time. Let's try to find some names that are off the beaten path here. What about
you got a big level in Tesla to get through on the upside here. After that washout low to 800. Keep an eye on 940 here. You're $33 away. Don't clear 940. You're looking another leg lower here in Tesla.
I would actually be curious to get your thoughts on Snapchat, because now we're on day 3 out from their earnings report. They're very surprising beat. Oh, I mean, surprising to me at least.
Been holding up.
Well, not this morning.
It's good that it's held up for a couple days here. Well, this morning it's given back a little bit, but I don't know. Long term, I don't like Snapchat. So, the path to get, lower here, I'm not sure of. But I think when I look at this 2 years from now, I think it's lower.
And I think I gave that number. I believe that was on Friday. That old resistance at 34.25. You made that low at 34.10. I mean, where are you going to go under 34.10? If you're banking on this being a $40, $50, $60 stock, then you don't want to take out that 34.10, because you got a lot of work to do in that gap there. So a lot of people got caught slow selling. Keep an eye on that low from Friday, 34.10.
RAG very polite with his. Hope you guys are well. Can I please have your views on AOS? Good value stock, good cash flow with good growth prospects. I like it when people say please.
He's very nice. He's from
very nice.
overseas.
AOS.
It's a water heater company, right?
I
believe.
Yes. Yeah.
Yeah, water heaters.
Yeah.
I mean, it's pulled back. What's the P on this thing? What's the P? We always ask the question.
It's forward P is 20, trailing P is 24.
Yeah, it's just slowly been walking up. I mean, actually, if you're looking from a technical basis, it's holding trend. It does kind of fit the description of a value stock. It's obviously got stable cash flows, I'm sure, with water heaters. I don't know. I don't mind it here. I'm kind of lukewarm, but I'd say the longer term trend is still going up, and that's in your favor, and you're getting a pullback here. So maybe
I want to follow AOS is what we're talking, right? AO Smith.
Yeah, AO Smith, the water heater company.
Yeah, I'm gonna have to take the opposite side of the coin on. I mean, it's
like
good.
It.
I mean, I like it above 72.88, 73. Those have been your monthly lows going back to November. Okay, so it holds there. I just wouldn't.
Needs to hold here.
Yeah, that exactly. That's what I was going to say. 2 red monthly candles there. Haven't had that in a while. I mean, support is support till it's taken out. I just don't like that. Wow, you got to get green. In order to get green on the month, you got to get over to 76.42. So I use that as resistance. But when I see candles like this, I see it just hanging out there. I don't want to sit around if this thing takes out $73.
There's a lot of tickers that are relatively obscure being dropped, like SSD, which is I think a manufacturing play. A bunch of people dropping utilities in here, like EXC on us, which I thought all utilities.
I'll just put the utilities all together. I'm still going to say I've been wrong, but I'm still going to say there's a lot of money hiding in utilities, and they have had some pretty big runs. Some of these utility stocks, not all of them, but some of them have, and I feel like it's
kind of had their mind of their own, haven't they?
Well, they do move inverse to the market. We've been in a risk-off market here for the last couple of months. We really have. Even though we've had some spike ups, it's been a risk-off market, and utilities do well in that environment. I said, with that being said, though, you're still in a rising interest rate environment. Most of these are dividend plays. And I just think when the dust settles, it seems like the utilities they get there a little time when everybody's nervous about the markets, but then they eventually inevitably pull back. So I wouldn't chase any of these moves in the utility stocks.
What about like Alcoa and those types of names? Someone just
that's stuff trade, right? That just keeps continuing to work. Physical goods, aluminum, and everything. I mean, we've got manufacturing. Am I jumping in and sticking in the long term account at these prices? Maybe not, but the trades. How do you argue with it? I mean, it's straight up. You're in this, like I've always said, in this environment here. We've moved from the nothingness trade to the somethingness trade, meaning like you're producing physical stuff. And Kramer says this too, and he's absolutely right. It's the stuff market right now. Like we've seen steel stocks maybe underperform, but oil continues to move up. The aluminum has been, really unbelievable here with Alcoa. That's still, the trend is still your friend here, and the trend is higher. I mean,
Wow.
is there a
Yeah.
place for Freeport McMoran here, Joel? It's pulled back significantly. Like Alcoa's kind of went. Is there a catch-up trade maybe in an FCX
Yeah,
here
sure looks.
eventually?
FC sure is. I just say Alcoa, just keep an eye on the top of the range from yesterday, where it was trading up quite a bit. So use that as support. Yeah, you're looking. This looks like you get halfway back of that move when it was 46, 41 and a half, 42. But guys, I'm gonna let you take it from here. I'm gonna
That's a
hop.
wrap.
Spencer, I'll check in with you later
Yeah,
on. Go
that's a
get him,
wrap.
Triple D.
That's a wrap for our show. I want to make the same PSA that I made yesterday. If you see Benzinga in the wild and you think something looks off here, this doesn't look quite right. They're trying to ask me to DM them Bitcoin or whatever. Please, if you see something, say something. Email us scamreports@benzinga.com. We've had a number of people reach out
Oh
in the
man.
past couple of weeks. People on the internet posing as Benzinga or people from Benzinga. Hey, if you
They're
can't,
saying I've seen it before where they even say, oh, they work within Benzinga, or, like they're an affiliate of Benzinga.
nobody at Benzinga will DM you asking you for money. Okay, just
Yeah.
put that out there, please.
I remember I had this problem too before I got verified on Twitter. Maybe it's still a problem, but I haven't seen as many fake accounts since I got verified. But same problem. Like people were actually creating accounts of me and then saying, oh, would you like to invest in me, and asking my followers for Bitcoin. I will never go and, me with Bitcoin. I'm not going to go and ask you for Bitcoin. So, if it's a Triple D trader is DMing you and asking for Bitcoin, it's not me. It's somebody pretending to be me. But I think that issues since I got verified when at least it's not as prevalent.
Same thing with Nigerian prince. My family is from a different country, not Nigeria. So don't ignore any Nigerian prince scams while you're at it. But support scam reports at benzinga.com. That's going to be a wrap for our show today. Thanks to Nate Tobik. Hey, if you want a 25% off discount on Benzinga Pro, you should check that out. The link is pinned to the top of the YouTube chat. It is pinned or it is in our description. It is also scrolling on the bottom of the screen right now. Check it out. Click on that link. Try Benzinga Pro. It's amazing. It's worth every penny. And I'm not just saying that. I really do. I don't know what I would do without it, frankly, for my research and for my news. So thanks to Nate. Thanks to all of you in the chat. Live trading with Benzinga is going live in a couple minutes. Stay tuned for that. Everyone have a great rest of your day and good luck at the Open.